If you've been selling covered calls on some stocks that are underwater, it may be time to stop or at least pull back on those calls for a little while. I created a video a couple of weeks ago about how to sell covered calls on your stocks when they're trending down. Today, I want to do a part two on that, which is a follow up as to how you know when to stop so that you don't run into trouble of your strike being breached and potentially being at risk of having your shares called away below your acquisition price. So, Netflix is today's prime example of this. Here's what I want to show you. Ever since July, we've been on this downtrend. Probably, realistically, actually, since sort of October. Why am I saying October? Through here, we made a higher high, higher low, higher high, lower low, lower high, lower low. If we're comparing this high to previous high, one could argue that this is technically a lower high as well. Lower low, lower high, lower low, lower high, all the way down until now. Today is significant for a few reasons. Let me zoom in. So firstly, selling you covered calls on this setup, again, as long as we're going as high up in strike as we can, we're staying above levels of resistance, we're staying above these moving averages, we're doing all of that stuff, keeps us as safe as possible, but still allows us to earn some income on the way down. Today changed all of that. Why? This is the first bullish move that Netflix has seen in some time. We gapped up bullish. We've got a big, strong candle, opened low, closed high, bullish. We are above for the first time in, since November. We have a close above the 20-day moving average. We did it on nice big volume. All of that is bullish. So the last thing we want to do on moves like this is to start selling covered calls. Here's what I'm looking for to know, do we actually have a reversal or is this really potentially just a one-off? We probably need to get above this level here, call it 84.50, this previous high where we couldn't break through the middle of the Bollinger Band. We want to break through that level to establish, and confidently, to establish a potential new higher high. Then we're looking for the pullback, and we need the pullback to remain ideally above this resistance level. So above, call it $79. Then we want to get the bounce. Then we want to establish another high yet again, and then a higher low, and so on and so forth. So that's what we're waiting for right here for Netflix. Is this a reversal? In order to sell covered calls on the way back up, we need to be a bit more particular with when we're selling them. So we won't be selling them on days like this, right? We want to wait until this next move up has been exhausted. So we're looking for potential resistance at this next moving average, this 50. Are we going to get rejected? If we get rejected substantially, then we can look at selling a covered call, again, as high as possible and always close in time. Remember, we're only doing these a week out so that potentially we've got that rejection. The next move in the stock is down, which means we can sell our covered call today. Not today, but follow the story. Sell the covered call. The next move is down. That covered call goes into profit straight away. We can exit it at any time on that move down. Then what are we doing? We're waiting for that next bounce up. We hit the next level of resistance. We start to get the rejection. We start to look like our next move is down. And then we can start selling one at a higher level. But the important part is we want to give this next move up time to play out. We don't want to be selling anything now. It's tempting because you're probably like, oh, it's the first big green day we've had in a while. There might be some premium there. But The next likely move from a break like this is up. And we don't want to be selling our covered calls, especially if we're underwater, into that up movement. The other part that I'm looking at, if I hide my Bollinger Bands here, and even if you're not in Netflix, pay attention to this setup on any stock that you're underwater on, because they're all going to start to do this. Draw in their trend line for the downward movement, which starts for Netflix, kind of goes a bit like this, right? 20th of October, we've hit it a couple of times in November. We even tried again here just a couple of weeks ago in February. And this is our break. So if we get a retest of this, again, that retest is probably going to be higher than these lows, giving us a higher low, and then the move can continue. If, though, we fall straight back under this trend line and we make a lower low, then down is probably the next move. But as far as your covered calls go, if you're underwater, especially after today's NVIDIA earning and NVIDIA move, yay, go NVIDIA, we're likely to start seeing this on some of those tech stocks. So if I do have covered calls on some tech stocks, I'm paying super, super close attention to them. At most, they expire next week, next Friday, because I'm only going out about a week at the most. So nothing expires beyond next Friday, which just means that I've actually got time to kind of manage a little bit of this upward movement. But I'm definitely not selling anything on those shares that are underwater until we've now established this next move back up. So I hope that was helpful. In the description, I will link that video about the covered calls and selling if you're underwater, so that you've got both parts to the story. And then I've also linked in the description details on my mentorship. My next round is starting in March, and this is a lot of what we cover, a lot of the technical stuff. Whilst I trade primarily options, I trade them based on technicals, as opposed to I think that would be a nice price to own the stock at. I tried that, it didn't work out so well. So now I do a lot of technical analysis to make sure that I'm getting good entries, I'm as safe as possible, and ultimately managing my risk in a way that helps me sleep at night. So take a look if you're interested. If you've got any questions, reach out. There's an email address on the website that it takes you to. More than happy to answer any questions and have a bit of a chat to see if it is the right opportunity for you.